And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another bright, beautiful Monday, and I'm doing the best I can with this shoulder in a sling, and it's been killing me. So what I'm going to do is drown out my pains with the charts. And yes, we have some major economic data coming in this week. We've got Wednesday, the PPI, the Producer Price Index. And Thursday, the 13th, we're going to get CPI, year-over-year inflation numbers. And just following up, guys, this is an excellent economic calendar, my FX book, that you can use to see all the upcoming dates. And just wanted to review really quick. So the 12th, we've got, and it highlights the data there. So PPI 5:30 a.m. The previous was negative 0.1%, and so we're expecting an increase in PPI to 0.2%, and that would be bullish for the dollar, bearish for the markets. That is stocks and Bitcoin. And then we've got year-over-year inflation coming in at 5:30 a.m. The previous was 8.3. The expectation is 8.1%. And again, what's really important is you have the expectation, which is 8.1%, and the reality, what comes in. So if that comes in higher than expected, like last month, I believe the expectation was 8.1%, and it came in at 8.3%. And what happened? The stock market crashed. Here's a great tweet by Bar Chart that shows, we had a 4% decline last month. You can see it's cut off there, 4.33% single day decline in stocks as the expectation versus the reality, things were worse than expected, so the market tanked. And it says here, CPI will be released on October 13th. We've had 9 reports so far this year, and the S&P 500 has traded negative on 7 out of 9 of those reports as they came out. The last report, the S&P falling more than 4%, which is rare for inflation days. So yeah, that was a big drop last month. And as you can see, it's the expectation versus the reality. So that is that. And what else did I want to bring up? Another tweet here from the trading tank, and this from the trading tank. Showing a chart that says major market bottoms have occurred in October more than any other month. So does that line up with our expectation? Bitcoin putting in a potential bottom on this blue line here, October 31st. October 31st, Monday, October 31st could line up for a nice bottom. And I will review why I believe, well, I'll just tell you right now. From the peak to the next high, basically we've had 11 bars down, 9 bars up. And this is on a weekly time frame. 11 bars down to the bottom and 9 bars up. If we count 11 bars down, that'll land you right there on October 31st. So if this pattern kind of holds true here, we're expecting some kind of a bottom to come in there around October 31st. So if CPI comes in worse than expected and PPI worse than expected, that would certainly line up with the dollar rallying and Bitcoin putting in a bit of a low, and I'd be looking to kind of buy the dip at that opportunity. Again, not financial advice, not a financial advisor, and this will all be mitigated with a daily closure below 17,500 in my book. That's on spot price action. that will be the kind of nail in the coffin for me expecting that move to be initiated. What else did I want to bring up here? So we're talking about Bitcoin on the weekly time frame, and there was quite the debate online about this candle right here, which looks like an inverted hammer, which could traditionally be a reversal type candle saying, hey, a low is being put in. I would not confirm this as a weekly low until we get a closure above 20,500 on the weekly time frame, which very likely, if that does happen, gives us a leg up towards the yellow 21 at 23.4. Right now, the downtrend is still in full force, and you can see that by just putting in a trend line with these wicks right here. So downtrend still in place, and if you wanted to, make it a little tighter, you could do something like that from these peaks right here. It even lines up from this peak right here. So downtrend still in full force, and it really all depends upon the dollar here. The dollar had a bit of a bullish close last week, giving me the bias for some more upside continuation. And we did start off the day pretty bullish here, pulling back a little bit right now. And so where do the bull traps come in? For the dollar, well, for any asset, it's right at the 618. So here's what I would say. If we do close the day above that 618 fib, coming in at, call it 112.98, that would look good for some more continuation tomorrow. And as long as we are holding this trend line on the daily time frame, we're still in a uptrend. So this is, clear as day right there. As long as that trend line is holding. Now we could pull back here tomorrow down to the 236 and then kind of pick it back up. That would certainly be a possibility, but once you start to lose the 382 and especially the 236, typically gives you the downside bias. And if we saw a break to the other side, down below here, I'd be looking for, Bitcoin to play out the bearish divergence we had spoke about with a move all the way down somewhere in this level around 108, perhaps even a wick down to this blue box. But overall, the dollar is macro bullish, and based on the monthly time frame and the monthly breakout of this massive descending triangle, we have a long-term target for the dollar over the next, call it 3 to 6 months, up to about 150. And how do you get this measure move? Well, it's pretty simple. If I take so this is a massive descending triangle, and you take it from the 50% and the breakout level. You can see that target gets you up to about 140, but I imagine a blow off top could get you all the way up to 150. And let's see if it lines up with any of our fibs here from the low to the high on this monthly consolidation. Yeah, that takes you up to 154. And this is the targets that we expect to get hit on an explosive move, on a volatile move, which the dollar is seeing right now. So back on to Bitcoin on the weekly time frame, kind of giving us that. Here's the monthly chart. Again, we got a bit of a backfill, and now we are coming back down. So a rejection off that green 55 on the CME. The 4 hour is in a bit of a downtrend right now. And here's what I would say is, at some point we are going to put in a little bit of a bounce. And where would I expect the bounce to come up to? If we do get a 4-hour closure back above 19.5, I'd really be looking for a bounce anywhere into the 618 fib. We're getting the silver cross to the downside, and bounce could come as high as 18.5 on a wick basis, but overall, I'm expecting that downtrend to hold true. And as long as we're in a downtrend on the 4-hour time frame, meaning this trend line is holding, I would expect some more of those downside targets to come to fruition. I would say this, the 18.1 area on CMEs is going to be a critical area. And if that does get violated on a 12-hour time frame, I'd be looking for the more significant targets to the downside to play out. Okay, rolling back down to the daily, something we've been talking about over the past few days is the daily BBWP signal, and expecting that the next 24% move to get started as BBWP gets back above 20 percentile. And we did say this was a bit of a fake out. We come back down and then we get the real move, and the direction of the trend is currently down. And something to note is the whole time that the Stokes were crossed up here, we got a very small move. Kind of basically a sideways market since we crossed up. Right, we crossed up right here. So 7% bounce, not bad. And now to the downside, as we are crossing down right here, we had a little bit of a doji candle yesterday for an indecision, and now the market is breaking the slight uptrend that we did have. If we close anywhere here or lower, as you can see, we had these higher lows coming in through this pivot right here. And you could have maybe even drew it like this, something like that. So if the daily time frame does close anywhere below this wick, I would be looking for, let's see what the measure move off of something like this would be. Again, I'm doing my best here with one hand and a gimped out shoulder. So based on spot price action, yeah, that just gets you to the bottom side of the triangle, coming in at that $18,100 level, $18,145. But again, I want to see this wick taken out here on spot price action, coming in at 17,609. Any kind of a 12-hour closure below that level very likely gets us the next major move down. What was another tweet I wanted to bring up here? So we are breaking it to the downside. Volatility is low. As we begin to get expansion, we expect the price to go in the direction of those stochastics, which is down. And we do have a few drives of hidden bearish divergence coming all the way back from this point right here. So as you can see from this pivot right here, you've got 1, 2, 3, 4 drives of hidden bearish divergence, gives us a shot to the 1618 based off of the 4-drive philosophy, which, let's see where that lines up. That lines up right there at 16,920. And that would be the move I'm actually looking for Bitcoin to take. Possibly give a wick down there and a bounce. But it all depends on the dollar. The dollar is holding strong on the higher term time frames. We will cross up today with any kind of a closure above 112.41. So if the dollar does hold Now, here's the thing. On the hourly time frame, we are about to break this trend line and put in a few drives of hidden bearish divergence, which are we? So yeah, coming back from this pivot right here, you've got all these higher highs, but lower highs in price. And vice versa, there is some hidden bullish divergence coming from the other side. So remember, there is always going to be bullish or bearish divergence on either side of the trade. So coming from this pivot right here, let's see, actually, so you want to see lower lows in price. Yeah, my shoulder is on fire right now, 15 minutes into this video. Higher lows in price and lower lows, and that's hidden bullish divergence. So you do have it coming from this pivot right here. 1, 2, 3. If this confirms as a local low on the next hourly closure, we'll need to cross up above 113.15 for that to happen. We're about 10 cents away. So how can we confirm this? Well, this is going to close in about 6 minutes. If the next hourly closure closes anywhere above this peak or wick, whatever it is, that would confirm as a higher low, and I would be looking for the next target to get hit on the hourly time frame, which I'll use our lovely little fib tool right there and put a target up there at 113.54. And very likely, if we take out this peak over here, 113.79, dollar is on to make some new all-time highs. And we haven't really even had a pullback since this move up. Yeah, we had a couple on the hourly time frame. What does it look like on the 4-hour? Has not really had a pullback. So again, this one can pull back all the way down to 112 and give the stock market one last little relief rally, as you know, it's been taking it on the chin, bouncing a little bit just on the 4-hour time frame. As the dollar comes down, stocks get some relief. Bitcoin gets some relief. But that is where we're at right now. And we are breaking this, you know, we got 3 higher lows right here, but we just took this one out. And again, in the next 5 hours and 4 minutes, I think that's going to determine the fate of this move. I would say wait for expansion, BBWP to get above 20%, and that'll give you the next 24% move on Bitcoin's price action. And where does the invalidation come? Well, basically Stokes would have to cross back up above 20,235, and that's, I think, naturally going to come down slightly on the next closure. We'll have to see on that. But right now we're maintaining the daily downtrend, and we'll have our first lower low and probably get a bounce. It's not going to happen all in one shot here. You know, Bitcoin typically, you know, the bigger swings in price are, you know, usually 5 to 10% swings at most. So if we shaved off another 5% tomorrow, yeah, that would give us to the bottom side of the range. 10%, 12% gets you down to that level. So let's say over the next 2 days, we peel back. I just don't know of any bad news coming up until Wednesday and Thursday this week, unless people are just getting out ahead of this bearish news. So that does tell me there is a threat of a bit of a bounce here before it all breaks down to nothing. And actually, as you can see, if you change that to use these wicks, really, I'd like to see this low get violated on a daily time frame for us to call this a meltdown, and the dollar to head up to those targets that we're talking about. All right. I think that's it for Bitcoin analysis today. Oh yeah, what did I want to show here based on the weekly time frame on Bitcoin? You know, again, a lot of debate on the interwebs about this weekly candle. And actually, I pulled this off of the guy on Crypto Banter. He had a great point and something that I was, struggling with in my own mind. What kind of a closure was this? Well, I will default to CMEs on this, on the weekly closure for last week. And this is a spinning top or a bit of a doji, an indecision candle on the weekly. But nope, that's not the article I wanted. Inverted hammer. Yeah, so it was an inverted hammer on the weekly time frame for Bitcoin on spot price. That is the classic inverted hammer. And if you pull up the definition of an inverted hammer, it says from Bolkowski, years ago when I started learning about candlesticks, I already knew about the hammer, but the inverted hammer escaped my attention. I thought it was a hammer upside down, but it's not. A hammer is a single candle line in a downtrend, but an inverted hammer is a two-line candle. Also in a downtrend, the inverted hammer is supposed to be a bullish reversal candlestick, but it really acts as a bearish confirmation 65% of the time. The overall performance ranks it 6 out of 103 candles, meaning the trend after the candle often results in a good-sized move. Now, what else lines up with Bitcoin having a pretty good-sized move is, another tweet here. Where is it? Do I have it up here? Nope. Nope. I'll just tell you what it is here. Bitcoin is only consolidated for 40 days or more 2 other times in its history, and both have proceeded. It's been more than 40 days of consolidation. So, quite a long consolidation here. And I want to clean up this chart, so I'm just going to take out all these trend lines here. And I want to throw on the Bollinger Bands. And so when the Bollinger Bands get real tight like this, that means we're in a period of consolidation and an explosive move is about to happen. Hence why the BBWP is at very low levels. That is the Bollinger Band width percentile. So it's measuring the width of the Bollinger Bands. And that is why an explosive move is about to happen to the tune of about 25%. So this week's CPI data is going to be the range breaker, the range to the upside, 20,000, call it 20,500. To the downside is going to be 18,100. And a break of this range is very, very likely going to get us the next 25% move on Bitcoin to the upside or to the downside. Right now, momentum is to the downside. So we will be following this indicator throughout the rest of the week to give us an idea on what may happen. And yeah, so that's exciting. Yeah, the other 2 times in history, I'll just show you here. I'm going to need to zoom out quite a bit here. But as you can see, those Bollinger Bands are very close together. We had another time right here. Oh, I don't want to say two other times in history. Very low period right there. Very low period right here. And the other big ones was right here. And let's see, how big of a move was that? 35%. And this one right here. Right in this zone. And you can see after periods of long consolidation, I believe the 40 days or more was this period and this period. Those were the other two times in history from the tweet that I could gather. But this one resulted in a pretty sizable move. 48% from the low to the high, 36%. So I do believe this will lead on to a pretty sizable move as volatility is very low, and who knows, we could range for a couple more days. And just following up on the 2-day and the 5-day signals, which we've also been tracking, which the daily will vary. So the 2-day is now on the floor and momentum will cross to the downside with any kind of a closure below 18,774. And the same thing goes for this one right here. We want to see the exponential get above 20%, and that should give us the indicator the move is on. So here was the first move we were expecting. I think the average move from the 2-day time frame is about 39%, and the first standard deviation 32 to 46%. So this move on the 2-day time frame was angled actually with expansion above here. Yeah, we got a very weak move. So that's the thing about statistics and probabilities. They're not guarantees. They're statistics and probabilities. So the average move is 39%. What did we get from the expansion phase, which was right there? We were expecting the move to come to the downside. What happened? It went to the upside. So that one definitely got the wrong direction of the trade here, and that's on spot price action. 10% bounce in your face. So that one did not work out too well. This one we crossed up again. Volatility did not expand. And so what about the 5-day? 5-day is going to remain crossed down as long as we're below 20,609. So that $20,500 pivot is going to remain very important here. And we were talking about these pivots on CMEs for the past couple of days. And we did say this, that back when none of this price action had happened, we said any kind of a 4-hour closure above here would get you a move up to the top side of the range at, I don't know, 20,200. And if we closed back below this, likely going to head back to the bottom side of the range, right around 19,000 bucks or 18.8. And it looks like that move is happening right now. And here's what I would say. The 100% retracement is happening. This was a bit of a double top. And with a break on a 4-hour time frame below this guy on a closing basis, I don't want to call it, but that's the technical target for something like that. And let's see if we got the phantom div all the way. Yeah. So coming back from this pivot right here, you've got all these slew of lower highs and two big ones just right there, but higher highs in RSI, hidden bearish divergence. And I'm willing to bet more than 4 drives because look at all these highs right here. So coming from this pivot right here, we got 1, 2, 3, 4, 5, 6, 7. 7 drives. Let's see, is that going to be down to the 423 at 1450? We'll only see, only time will tell. Needless to say, there's a lot of price action that's going to happen this weekend. I did want to touch on XRP, which has been relatively strong and had a pretty strong closure last week. I just remain with the bearish bias on this guy because of this death cross on the 5-day. And yeah, where does invalidation take place on this move from wick to wick? So we could get a bounce all the way up to 59.83, even up here. If we get a 5-day closure, I would say even above the 0.5, we're very likely going to come up to that 786. So that doesn't really help us. How about on a daily time frame? The daily in a bit of a breakout, and we did have a bit of a closure this weekend above, you know, this major pivot right here. Broke out, tested it as support. Are we going to get some bearish divergence? Yes, and that very likely could get us back to the bottom side of the range along with the rest of the market. And yep, you'd have 2 drives right there of bearish divergence. First target, the 21. Second target's going to be that 42 bucks. Overall, I would expect this one to come down with the rest of the market. But right now it looks bullish, so and you know, pretty much anything above that 56 mark, and I would say, yeah, invalidation, probably going to rip up a little bit higher. And where's the measure move on something like that? See, and technically we already hit that 1618. So yeah, any kind of a closure above there. Next target is going to be the 61 cent level, and you can see that last prior high over here. So yeah, there's multiple drives of bearish divergence. So when this one does come down, it's going to come down hard. All right, I think that's it for today, guys. Hope you have a blessed and highly favored day. And I'm going to wrap it up with some news here as, yeah, at a request from my social media department here. So first bit of news here, Nasdaq falls to 2-year low on Monday, led by a decline in chip stocks. So stocks fell Monday with the Nasdaq Composite Index falling to the lowest level in 2 years as tech shares continue to be the hardest hit in the bear market because of spiking interest rates. The Nasdaq Composite fell more than 1.8% to touch its lowest level since September 2020, weighed down by a slump in semiconductor stocks, NVIDIA and AMD. Later in the day, the index recouped losses, trading down only 0.5%. The S&P also fell, dragged down by semi-stocks and dips in major tech names like Microsoft. The benchmark lost 0.32%. The Dow Jones gained 11 points. The market is not closed yet, so bottom line is they're just throwing up excuses as for why the market's going down. The reason it's going down is tech stocks led it to the upside. Techs are going to lead it to the downside because they are risk-on assets. People are de-risking their portfolios right now because why would you want to put on risk in a bear market? Doesn't make sense. In a recession, right before a real estate collapse, it doesn't make any sense. Interest rates are going to the highest level we've seen in many, many years. Just look at the bond market, the 10-year yield. The 10-year, sorry, that's the 2-year. And there it is. The 10-year at 3.96%. The 30-year, 3.93%. And the 2 years at 4.3%. So what's even the point of doing a 30-year when you can get a 2-year at 4.3%? I guess you can lock it in for 30 years or 10 years. If you want to lock up your money for 4% for 2 years, hey, that's better than your checking or your savings account. But if interest rates climb higher, those bonds will take a loss. Now, you tell me if that looks bullish or not. I wish I was buying that stock, right? And we are about to take out these highs. If we do take out these highs here at 425, next stop will be at... So let's say you lock in that 2-year bond right now. And this is why the pension funds are going collapso in UK. Wow, that's 23% higher. So, yeah, if you lock in that 10-year yield at 3.96 right now, the 2-year, excuse me, and then we get the next leg up here to 5.28, that's a 25% increase. Those bonds will take a huge hit, 25%, to the tune of 25%. Was that the 10-year? That was the 10-year, right? Yeah, it was. Next level up on the 30-year. So if we take out these highs, wow, this, the bond market's going to get crushed. That's 20% higher, the next target. The next stop. So we are having a breakout with an impulse move right now. Hard to call a top here with the dollar rallying. King dollar racing to the moon, hurting these stocks. The Dow's down 2.2%. And yeah, Dow is getting absolutely crushed. Bearish engulfing candle on the weekly so far. What about on the daily here? Massive liquidity zone coming down right here. People went long in here. And I imagine they're going to do the opposite if we start to take out those lows. All right, back to my articles for the next piece of news. So Denmark's inflation rate hits 10% for the first time since, what do you know, 1982. Rising consumer prices are publishing the economy into recession. Nordic country faces general elections with inflation as theme. Denmark's inflation rate jumped to double digits for the first time in 4 decades, underscoring the likelihood that higher prices for goods and energy are pushing the Nordic country's economy into a recession. The consumer price index jumped 10% in September from a year earlier, up from 8.9%. So the UK is at 19%, Denmark's at 10%, the US is at 8.3%. What do you think the inflation rate's going to be coming in this week? Post a comment below. Let me know what you think. Are we coming in hotter? Are we coming in lower? As the news gets worse, I imagine inflation just goes higher. And we all know they're giving us the fake news anyways. They're not even giving us the real inflation numbers. So if you cannot believe them, what they're saying, and they're giving us a high number, just imagine what it really is, what inflation really is. It's bad. And what's the next piece of news? Oh, I thought this was interesting. So FTX expands partnership with payments giant Visa to offer crypto debit cards in over 40 additional countries. Is the United States one of them? So one of the most popular crypto exchange platforms in the world, partnering with Visa. According to the new press release, FTX is expanding its partnership with Visa to offer crypto debit cards to customers in over 40 countries, with a focus on Europe, Latin America, and Asia. The cards are already available in the U.S. Will be linked directly to a user's FTX account. Customers can pay for goods and services using the crypto balance held in their FTX wallet. So that might be something you want to do if you've got some old dump coins that you want to spend before they go down, right? I wonder if they will let you write off those losses. That'll be something you have to ask your accountant. All right, that's it for today. I'm sweating bullets here because of this ARM cast thing. It's awful. I don't like surgery. I don't recommend it to anybody. All right. I hope you guys have a blessed and highly favored day. We'll check in tomorrow with some more crypto news. Take care.